The European Central Bank today revealed it will leave its main interest rate unchanged by 1%. The ECB pledged to continue providing banks with unlimited low-interest loans, at least through the end of the year. Today I am joined by Clemente De Lucia, Senior Economist at BNP Paribas in Paris, to discuss this further. There were no rate cuts as expected by many economists. Do you think there will be a rate cut of 1% next month?
Therefore, I would say that the Governing Council have 10 doors open for further actions. Admittedly, economic conditions are there and are consistent with the interest rate cuts. I would say that probably the Governing Council is taking, I would say, wait-and-see approach, understanding if the deterioration of the sentiment indicators are due more on uncertainty rather than reflecting more fundamental problems. In this case, therefore, an action will be needed. While if there is just uncertainty, if there are some elements that could reverse uncertainty, therefore conditions will be better. Therefore, is waiting to see what is going on the economy.
Today's press conference revealed that growth remains weak and there is increased downward risks. Mario Draghi also claims the Eurozone will gradually recover. Do you think he said enough to restore confidence in the Eurozone?
Probably there should be some improvement in sentiment in the Eurozone. Nevertheless, there should be still some underground problem. You cannot. The problems that are facing today's the Eurozone are still there. Clearly, the Greek crisis regarding the formation of government has added some tensions. Nevertheless, there is still the problem of contagion risk and how you can solve the contagion risk. And for the time being, the firewalls that has been created, at least we have firewalls, something that we didn't have before. But now the size and probably the effectiveness of the firewalls are still low. So you have to work on this. What is needed to be done for the Eurozone is something like having a long-term solution regarding the economic and monetary union, something that probably Mr. Draghi is also asking to European leaders to take actions in this direction.
There is a possibility of another 3-year LTRO. When do you think this may happen, and do you think this would revive the Eurozone?
The Governing Council has to understand what is the problem. If the problem is more on demand for the banking sector or is more on the supply side. If there is a problem on the supply side, therefore banks have problems in funding liquidity to the market. Therefore, another LTRO of longer maturities is needed. Otherwise, if this is more a problem related with demand, ECB can act, but also it's something that has to be done more on the other side. Because, for instance, now they have problem regarding the banking sector and the stability of the banking sectors. Many banks have to be recapitalized, and therefore, if the state of the balance sheet is quite weak, the confidence in the banking sector is quite weak, and therefore you can have problems in the money market. Therefore, the bank has problem finding funding conditions, in finding funding, and therefore they have problems also in lending to the counterparts and lending to the economy. And speaking about recapitalization is not something related too much on monetary policy. Something that has to be done by national authorities over national or supranational bodies, but not on, strictly speaking, on something that has to be done by monetary policy.
Draghi called on banks to strengthen balance sheets further and said subdued credit demand will prevail and that the ECB plans to extend unlimited cash offer. What are your views on this?
Strengthening their balance sheets is a key condition to regain confidence. If you strengthen your balance sheet, you can also raise money by yourself and not be addicted to the ECB liquidity. So again, the providing liquidity by the ECB can be only a temporary solution, just to buy some time. But after, the problems are there. So therefore, the call of Mr. Draghi to recapitalization of the banking sector is a key element.
The Eurozone experienced a small contraction in gross domestic product in the first quarter of this year compared to Q1 of 2011. However, Q1 remained unchanged in comparison to the previous quarter. What do you predict for Eurozone GDP for the remainder of the year?
I would say that for sure the second quarter will be a tough one. Already soft data, but also hard data confirm this, and probably you can have a contraction in the second quarter with respect to the first quarter. For the second half of the year, clearly is depending on the evolution of the crisis in Greece and also on the evolution of the decision that will be taken by national authorities. If there is a clear view regarding some kind of solution, some kind of strengthening and enhancing of fiscal integration, therefore confidence can come back in the Eurozone, and higher degree of confidence can decrease tensions in the market, reducing interest rates, and therefore pushing and setting the base condition for growth. Nevertheless, for the time being, we don't see a very buoyant second quarter of the year.
That is all for now. I will be back tomorrow to discuss the current state of the Spanish banks and the upcoming bank audit set to take place at the end of this month. Goodbye.